and welcome to another episode of the Elevating Property Management Podcast. I am here today with Mike Taravella, CPA and principal at Rand Partners. Mike, thank you so much for coming on.
Colin, thanks for having me on. Super excited to talk about numbers, real estate, and the whole kit and caboodle. So excited to be on here.
Yes, absolutely. So, as you kind of stated a minute ago when we were just chatting, fellow numbers nerd, you're a CPA, I'm an engineer. So let's dig into the numbers with property management. But before we get into that, can you tell us a little bit about yourself, kind of how you got to where you are, and tell us about Rand Partners?
Yeah, absolutely. So my background, I grew up in Metro Detroit, and my whole family were teachers or worked for Chrysler. And so literally it was the whole thing about school is get the safe job. So I was really good with my numbers, and even my math teachers called me a sellout for finding accounting because I knew I didn't want to be a teacher because I saw how hard my mom worked, and I was just like, it's a no for me. So I knew I wanted to do business even since like first grade. So accounting is the language of business. I go through my undergrad. I started a company and like a screen printing company. That's what clicked of like, I want to do something different. And so I worked for Ernst & Young for a couple of years. I learned so much about the financials of large companies, and I could just kind of see the processes where I failed with my startups. But with that, I realized I couldn't work more in public accounting to make more money. So I had to figure out something to have my money work for me, and I fell into real estate. So as I transitioned working from Ernst & Young to Dan Gilbert, the owner of Quicken Loans and the Cleveland Cavaliers, I kind of was telling his businesses how to elevate theirs and grow with systems and processes and growing. But I realized I wasn't doing that with my real estate investing. So I went on the internet, connected with a few people on Bigger Pockets, and went to their meetups that they had, and just fell in love with multifamily because it was all the things I was telling, I was telling startups to do this with their business, but I wasn't doing it. And then multifamily was like the yink, the light bulb, the the shining moment of like, oh my gosh, this is it. Mm-hmm. And so I just dedicated myself to a year or two, educating myself, helping people, providing a ton of value. And then worked with, got the call with Jake Stenziano, Gino Barbaro to come down to Knoxville and work with Rand Partners, and which Rand Partners is the investing arm of our family of companies. We have an internal mortgage brokerage. We have the education company and our property management company. Okay. So we all work hand in hand to help create an impact. On the partner side, we offer passive investing opportunities to our investors throughout the Southeast, primarily in Tennessee and Kentucky, and hopefully Huntsville, Alabama soon enough. But we're just looking to help our investors with properties that cash flow, generally focusing on value add, but as long as it makes sense. So that's kind of the spiel on me, the team, the dream team, and what we're working on.
That's awesome. Well, you certainly do have a lot going on, it sounds like there. So
as you know, never a dull moment in property management.
Never a dull moment. So let's talk about, I guess, your relationship with kind of what you do for Rand Partners, and then your relationships with property managers or property management companies.
Yeah. So we focus, I'm the asset manager and acquisition. So it's twofold. We help find and identify the properties, and then I'm making sure we're executing the business plan. And I think the biggest thing, so on the acquisition side, is working with brokers, finding owners, trying to get them. But once we get the deal, I think the biggest misconception I want to help get rid of is that as the asset manager, you're managing the manager. Mm-hmm. I think it's just it's a very, you hear it on the podcast all the time, but when you're in it, that property manager is going to bat for you, your property, your business, because you're not there. So the asset manager handles oversees all the numbers and the execution, but they're not in the day-to-day getting the calls from the residents, the leasing, there's so many aspects. Like one day we got a photo circulated on our team because there's a baby alligator in one of the units, which is illegal in Tennessee. That as an asset manager is a funny story, but to someone, the property manager, all right, animal control of this, what do we do with the resident? There's 100 different things that I would have not known what to do except, oh, cool, an alligator. So, and I think too, when it comes to the number side, I think it's important just, you have to execute, right, as a team. And that's
Mhm.
what you are, whether you're using third party or in-house, whatever you do, you have to execute. And the numbers tell the story just with my background and seeing it. So the biggest thing is, are we occupied with
Mhm.
physically? Are we collecting? And are we hitting our budgets? I
Mhm.
mean, and there's different tiers that we can go deeper in on our, what we call our pulse document, but you just like the analogy that I use with our team is like Shark Tank, you have to know your numbers, and every property manager is the CEO of that property, and you have
Yeah.
to empower them to execute that, because the last thing you want to do as an asset manager is yell at them, berate them. Hey, we're over budget. What happened? Like, you collaborate with them on making budgets that are plausible and can make sense. And if something happens, obviously there's one-offs, but if it's a recurring issue, then you have to have that bigger question to make sure, is that the right team for you?
Yeah, absolutely. I think with the budgets, right? Tracking those and you get a budget arbitrarily dropped in your lap and say, "Hey, here's our budget." And it's like, "Well, we are working to hit that budget, but what do we want to do with this mess that we're dealing with over here, right? Or this systemic issue across multiple units, right? Aging appliances, leaks that nobody had any idea about, right? And then,
Yeah, you buy a 1960s product and then you're expecting it to run like a 2000s product, but you have to invest in the plumbing, the electrical, and
Mhm.
all this other stuff that I can say in my Excel on the acquisition side and be like, well, now we're going to get a 20 IRR. But in reality, it's not even close.
Yeah, no, absolutely, absolutely. So I love that you're discussing, working collaboratively with your property manager. And we have some great owners that do that. We have weekly meetings with them, whether they own just one large property with us or a handful of properties where we review, a few key metrics, gross income, repairs and maintenance expenses, compare that to budget, et cetera. And
Yeah.
those meetings are really good, I think, for both sides, right? It's good for us to continue, like you said, for us to know our numbers. What's the, when you're having those discussions with the property manager and, you know, collections are looking low or maybe the budget items are higher, what are you, wanting out of the property manager to either bring you comfort or to kind of take the next steps?
Yeah, so on the front end, we do the budgets every Q4 of the previous year. So
Hmm.
we're all in alignment, right? I don't come up with the budget and go, here it is, and take it or leave it. I'm making sure, hey, does this sound about right? Is it per move out, per turn, per whatever, just to
Hmm.
make sure we're all on the same page? Because obviously, like looking at 2020, no one could have predicted the pandemic and how that affected. For us, it was collections were strong, but
Yeah.
still, there were just so many different factors that, PPE, and it's just making sure we're protecting our team members. But it's, we agree with this on the front end, and if
Hmm.
we're out of budget, the questions I ask are, what happened? Because obviously, like, we could have had 20 turns on the property and we only budgeted 8.
Yeah.
So it's what happened. So then I know, is it recurring or it's a one-off, right? Like
Yeah.
workers' comp and stuff. If we're not collecting, I think it goes back to, we do a net promoter score. So on a scale of 0 to 10, how likely you refer a friend or colleague to stay at our property?
Hmm.
If that NPS score is not where we want it, then I'm going to assume our collections are poor because we're not making a positive impact, right?
Hmm.
So it's just making sure that we're providing a high level, world class customer service. And generally, when we're having those higher ratings, our
Hmm.
collections go up. So, for example, even too in the pandemic, we were doing communications every other month or every other day. I shouldn't say every other month, every other day. And then even too with the toilet paper kind of frenzy, what we did was we gave a roll of toilet paper to each of our residents because we had a commercial supply. And we just
Hmm.
said, hey, during these crappy times, we're here for you, right? So it's like those little nuances and touch points is that
Yeah.
people overlook, but we're here to make an impact. And so it's just making sure how we can do that, right? Like during a pandemic, obviously we want our residents to pay, but is it introducing them to here jobs, or is it rental assistance programs, or whatever we can do? We're here to help our residents. And that's just when we have lower collections, that's the question I ask of how can we make a bigger impact to our residents?
Hmm. Yeah, no, I love that. Yeah, the pandemic did throw a wrench in everybody's, discussions with their tenants and communications and, uh, you know, I saw a lot of the spectrum with tenants and communication with the property managers. You get on some of those forums online where they're like, this property manager comes in with an iron fist. You still have to pay. Rent is still due, right? And then that gets shared on social media as like, let's ruin this guy's business. And then the other spectrum, you're like, fairyland, let's forgive 1 month of rent for everybody. And I'm like, I can't do that because that's how I make a living, and I don't want my owners to not be able to pay their bills. So somewhere in between, it's like, let's work together. Let's be collaborative.
Yeah, and I think that was our messaging too. Is like we realize that this is a business, and we want to, we want to be accommodating, but like it's that, hey, if you communicate with us, we're going to be more accommodating, and we gave all of our residents like a list of 401, every local assistant, like whatever we could do, because we want to keep the integrity of the community. And the last thing, like it's a tailwind, right? Like even looking on the acquisition side, you saw those properties that no one paid rent for 2 months just because, it's like financing, we wouldn't be able to get any. We'd have to get a bridge loan, which there was no bridges. So it's, I think it's just realizing like, hey, we want to make and that's where it comes back to the impact, right? Like I in all of this chaos, like even if we had it to the point where we didn't get a hold of these people, so we door knocked, and obviously we weren't like, hey, pay us. It was, hey, are you okay? Basic human need. Are you like, how are you doing? Because the last thing we want to do is pay rent, but we just want to make sure we're helping our residents every single day, especially during these times.
Yeah, absolutely. So, you're regional, so not all of your properties are in your backyard. Are you guys having larger complexes where you have somebody on site that you employ directly, or are you guys using third-party property management?
Yep. So we generally, the first so we're in Knoxville, we have about 900 units, and that's because Jake and Gino has scaled their business up. But generally on the first acquisition, like we have 143 units in Lexington, Kentucky. So once you get that first acquisition that's bigger and you can have on-site team members, then you can kind of look for those sister properties. But for us, we're targeting at least 100, 150 units in a particular if we're trying to crack a new market. Or it can be smaller, but the rents have to be much higher. So if it's like 1,400 rent per month, but there's 50 units, it's like, okay, we can be able to have on-site management for ourselves because we manage everything that we own.
Okay, all right. So you're self-managing that. You're not using third party.
Yeah.
Okay, gotcha. I understand then your discussions with your property managers are coming kind of a little bit from the employer side, right? Where you're the employer for them. So with a third party property manager, even with your on-site guys, so you're talking about the net promoter score working collaboratively. What's some ways that you guys are working to provide that customer service, across a range of properties?
Yeah, so I think the biggest thing that I see teams make is the mistakes they make is like the language they used. So I think like instead of we never call them our team. I can't even say it. It's tenant. People call them tenants, but we call them residents. Instead of an apartment, we call it homes. So it's like that little vernacular, I think, just changes the paradigm of everything you do, because it's really making sure of like, these are people's homes and we're here to help. Right. So we're trying to provide just that high class, like knowing residents' names. I can tell very quickly when a property manager doesn't know their residents, they're not going to stick around for very long.
Yeah.
The ones where they know the numbers, they know the residents, and they care, you see it very night and day difference.
Yes.
And so that's, I think, just that vernacular change of like homes and like from apartments to homes and tenants to residents. It just changes the paradigm that allows you to make much more impactful decisions. Like even there's property managers who know the residents' dog's name. And gives them treats. So I think it's just that level of customer service and knowing, because when it comes down to it, I mean, we incentivize her on like delinquencies and making sure we're getting collections. And I've just seen property managers rattle off what they're doing, or I talked to them yesterday and like, they don't have to check their notes. They just know.
Yeah, no, that's great. I know, our team does a great job of that, and knowing people's names, saying, hey, we're having an issue, with this person, and now that I'm, on the higher level, in management and working with my PMs, I don't know the names anymore. I know more of the addresses, but they're rattling off all these tenants' names, residents' names, if you will. And I'm like, you're gonna have to help me out. Where do they live again? So, I'm always impressed when they develop those relationships. And not being on site, a lot of our stuff's not on site. We're managing it from our office because it's a fourplex here, it's 8 units there. Even if it's a 20 or 30 unit, we don't have anybody on site. Um, you know, so still building those relationships without being in person. I'm always impressed when people can have that level of customer service. So
Yeah, and especially too, it's in 2020, it's harder, right? Like
mm-hmm.
even we pushed up virtual leasing, so we have like a YouTube page for all of our property. Like every property has a playlist, so and that's hard, right? Like you to remember those, and it's easy too in property management. It's a number, right? Like you said, the address, but I think it's just in 2020 the differentiator for all of our businesses to make that individual impact, especially when there's so much uncertainty in the world.
Yeah. Okay. Let's change gears a little bit to value add and kind of working with property managers there. Have you guys had opportunities to go into these complexes and do some value add, either through construction or I guess performance increases?
Yeah, a little bit of both. So in our 143 unit in Lexington, Kentucky, we just owned it for over a year. And comparing the T12 when we got it to now, we saved about $1 million in expenses.
Wow.
And it sounds like a lot, but when you break it down, there's like a lot of dues and subscriptions from the previous manager of just every little bit getting chopped up and presented. We saved 30 grand a year by not keeping a billboard to rent the property.
Wow.
So when you go into these properties, it's obviously the thought process is to increase rent. We increase other income as well. So instead of charging security deposits, we do move-in fees, which just makes it easier, because my thought in my accounting world is don't be a payable, have it just recognize that revenue day one. But also too, we have a different property in Louisville, and rents were averaging like $500-$600, and now on average they're like $750. So we primarily targeted the mom and pop owner who are just tired and want to get out. And so we've seen just the deferred maintenance going through and just really making sure we're making a clean, easy property that people want to live in high demand areas. That property in Louisville, there's a huge development that's coming for jobs. And literally we have 100 guest cards probably a week, which are general inquiries on the property through apartments.com, Facebook, etc. And we'll be 98% filled, and literally we'll have 100 people inquiring about the property, trying to get the 1 or 2 units that might come online. So
that's a great problem to have.
Yeah, exactly.
yeah, for sure. So as a third party property manager, I like to ask this to everybody that we're working with is, what are the 1 or 2 things that we can do to bring value to an owner, or, make property management a better industry for you?
I think the biggest thing is establishing rhythms on the front end. And I think it's because, like you said, certain owners have certain KPIs, but I think just a lot of, if you don't establish it, it'll never be clarified. And then it's not an ideal path. And in property management, there's so many moving parts, even before 2020, like takeovers, due dates, who's doing this, and it's a run and gun. So I thank every property manager ever. So thank you and your team for doing what you do every day, because it's not easy. And I know you don't get thanked enough. But the second thing too is knowing the numbers as if you are an owner. And I think that's just the biggest piece that, some property managers do it for the fee and, but if you think like an owner, I've seen a lot of just these, these businesses scale, and then they just work hand in hand with an investing firm. So I think it just, if you're a property manager right now and you're like, oh, kind of the dog days, it's almost the end of the year, you want to relax, think like an owner. Call that place that's next door, like, oh, they want to sell or whatever, because then that's how you get equity. That's how you get the wealth. And that's how you kind of create that evolving business that no other property manager can even touch. And that's your unique selling proposition.
Yeah, no, that's true. We do track our numbers internally. We have some performance metrics that we track as a company, as well as on a basis for each teammate, right? So we just got done with that meeting today, and we have 4 metrics that we track on each property manager, and then a few more than that globally for the whole company. And one thing that I bring to the table, that I talk about with our owners, is that I was an investor for over 2 years before I started a property management company, right? So there's that empathy to have with investors, with asset managers. Like, yeah, I understand why these numbers are important. I understand why collections are important more than just the fee that the property management company gets. I know you've got bills to pay, and you're accountable to investors on your end.
Yeah.
So yeah, that's
what's the one number that you think most owners scoff at or aren't as aware that they should be kind of going into 2021?
We track 3 or 4 numbers pretty heavily. We track percentage collected on a weekly basis. We track average rent per door, and we track occupancy, and we track month-to-month leases. And we are involved in a lot of takeovers of poorly performing properties. So we have a higher month-to-month. So we're always working to get them onto our leases. The one that I think that doesn't get looked at enough that we really like to track is the average rent per door. I know that a lot of people do track that, but I think it's really important because even if we're going through a reposition where we're putting a lot of construction or rehab into the units, if we can track the average rent per door, even if we have a little bit higher vacancy, knowing that that's a temporary issue, we can see and project out, hey, yeah, you might have 10% vacancy right now, but once we get all those units filled, we're going to be adding this much in revenue per month, and kind of start to project that out and the trend line for the average rent per door.
Plus, that's an amazing metric on your end, because when you get those underwritings, I think that's the one thing I've seen a lot of people or some people do is they're like, oh, we're going to turn 20 units in 3 months. And it's like, yeah, but are you? And are you going to be able to charge the rents? You know what I mean? So yeah. I think that's a phenomenal metric that I think, like, I agree, not many people are tracking because it aligns with your underwriting to a T, and that sets it all up. So
yeah, absolutely. Metric. I like to work with owners, asset managers before the close, when they're analyzing the deal through the due diligence process. So we could say, okay, here's what the rent is now. Here's where you want it to be. Based on how many doors, how aggressive do you want to be? Like, how soon can we get from point A to point B? Yeah. And if you want to raise all units by 20% in 12 months, I'm going to say, well, what's your construction budget and how much money do you have to bridge those debt payments when you're not making any money on a monthly basis? Yeah. Right? As opposed to, let's work together, as a team and say, okay, we're taking over, there's 5 vacant units. Let's turn those, a week to 10 days per turn on each unit. And then we'll get those occupied. We'll give notices to the next lowest tenants, or we'll try to raise them up and then start breaking it up into a bunch of phases so that we can do it while keeping occupancy high and driving rental income up.
Yeah, because that's huge, because it just, other property managers would say yes, but you have the secret sauce to break it all down of it'll take you this much time and money. Mm-hmm. And can you get there with your debt service? That's a phenomenal piece.
Yeah. And, one other thing that I like to look at during the due diligence process is, what fees are currently being charged? What could we add to the tenant side? Let's look at adding a basic rubs or a pet, or we're going to increase the rent $50 and work with them and say, okay, we can collect this much more in each of these fees, add them up together, divide them by the cap rate. Hey, in this 20-minute conversation, we just added $1 million in value to your property in 12 months.
Would you be interested?
Would you be interested? Yeah. So, one thing that we do is we'll put out a property improvement plan, right? If we're kind of interviewing on some bigger properties, and I'll say, looking at this, we can cut this, add this, the net divided by the cap rate, and here's what we think we can bring and increase value in a time frame.
Yeah, that's amazing. Thinking like an owner.
We have to, especially if we want to, elevate property management. And, we are a professional industry. Like you said, you're a CPA, I'm an engineer. We both think with the numbers, and, we have to bring the value that we can through our technical expertise. So
100%.
Yeah. Hey, Mike, if people want to get a hold of you, find out more about you and Rand Partners, how can they do that?
Yeah, absolutely. So my email is Mike mike.t@randcre.com. You can check out randpartners.com. I'm also active Mike Taravella on LinkedIn. All the socials. So just reach out to me there. I'm happy to help serve, whether you're active, passive, whatever. I just want to help investors be savvier, whether it be the numbers, acquisitions, whatever. So just hit me up if you have any questions.
Awesome. Awesome. Well, thank you so much, Mike. I appreciate you and all the wisdom that you bring to the game and to asset management, and your knowledge is great. And everybody hit up Mike if you guys have any questions. So thank you.
Everyone thank a property manager today, because their job is hard. Thank them. And it's been a hell of a 2020, but they deserve a big shout out as well.
2021 is going to get better. All right. Thank you.